What do you think happens when a company is supposedly too big to fail and then they start to collapse? That's right, the Fed comes and they bail them out. And that's why a lot of people think that our economic system is doomed to collapse. A lot of these companies that keep getting bailed out only make enough money to pay the interest on all of their loans. And these are known as zombie companies. We don't want that in the cryptocurrency space. Keeping these kind of companies propped up is a danger to the whole system because whenever one company collapses and they can't pay back their loans, if their lender relies on those loans to be paid back in order for them to continue operations as usual, then they could be in danger of collapsing as well. This sets up the potential for a cascade of insolvencies and liquidations that can bring the whole market to its knees. For better or for worse, when the Fed comes in and bails out these companies, they just print a whole bunch of money to fund those bailouts. But what happens whenever a private person actually tries to bail out a whole industry and they don't have access to a money printer? This is Sam Bankman-Fried. One of his biggest goals in life is to give away all of his money, and he's been working hard on achieving that goal by trying to bail out the crypto industry. He must have forgotten though that he doesn't actually have access to a real money printer. I'm sure he's been feeling like he had a money printer through the last bull market, but that's just not actually the case. As you may have heard recently, and as this article by CNBC says, crypto hedge fund Three Arrows Capital has plunged into liquidation as the market crash took its toll. Three Arrows Capital was one of the biggest cryptocurrency hedge funds, and it was founded by Suzu and Kyle Davies. They focused on investments in digital assets like cryptocurrencies obviously, and they were known for their highly leveraged bets, as this article says. Three Arrows Capital had large exposure to the collapsed algorithmic stablecoin Terra USD and the sister token Luna. They borrowed a whole bunch of money from cryptocurrency lenders to leverage their bets, and they put almost all of their leveraged bets on Terra Luna, which was a horrible idea, obviously. They thought that the cryptocurrency market was going to continue going to the moon, and so they leveraged all of their bets to try to make their company continue growing faster and faster, but they busted whenever the market took a downturn. This article goes on to say that the unwinding of 3AC has sparked contagion fears to parts of the market that could potentially be exposed to the company. When a company borrows a whole bunch of money from a bank basically, and then they put that in leverage trades to try to grow their business, whenever they collapse, they have to pay that money back still, or else they could be in danger of dragging down those companies with them. Some of those such companies were BlockFi and Voyager Digital. As this article by CoinDesk says, BlockFi liquidated Three Arrows Capital, and as this other article by Cointelegraph says, Voyager Digital issued a notice to default on Three Arrows Capital. Unfortunately, all of these companies decided that they wanted all of their money back at the same time, and Three Arrows Capital was unable to meet those margin calls. This put Voyager Digital and BlockFi in danger of collapsing as well, and this meant that they had to reach out and try to find a loan, because if they collapsed as well, a lot of people wouldn't be able to get their money out, and that would just continue to cause panic in the rest of the crypto market. Voyager Digital had issued a notice of default to Three Arrows Capital for its failure to pay its 15,250 Bitcoin and 350 million USDC loan. Three Arrows Capital had way too much money invested into one project, and now Voyager Digital had too much money lent out to one company. As you can see, these kind of things put these companies in danger whenever the market does take another dump. I don't know that we're definitely done taking dumps here in the market, and I think that it could continue. So whoever really bails out BlockFi and Voyager from their supposed attempted bailout of Three Arrows Capital is going to be in danger of needing a further bailout if they collapse due to another market downturn. It could make sense to try to buy up these companies at pennies on the dollar if they are a viable company and you think that they're going to be coming back in the next bull market. But you don't want to have too many liabilities that aren't going to be an asset in the future if you can't turn them around. This is where Sam Bankman-Fried comes in. He came in and he gave a big bailout to BlockFi, as this article by CoinDesk says. BlockFi received a $250 million credit facility from FTX. I know that Sam Bankman-Fried is a multi-billionaire, or at least he was before the market tanked by about 80%. But I think that his net worth is probably tanked about 80% along with the market, and I don't know how much money he has to continue pouring into bailing these companies out after he's already thrown so much money into investments like the FTX arena down in Miami. He threw more than $700 million at that, and I don't know how much more money he can continue to dish out before he ends up needing a bailout also. Now the news has come out that it looks like he's going to try to actually buy BlockFi for $25 million, which is probably going to be additional on top of that $250 million. But $275 million is a lot of money. I know it doesn't seem like a lot of money when you're talking about multiple billions of dollars, but when you start adding up more than $250 million transactions over and over again, it's going to end up being billions pretty soon. Like I said though, it does make sense to try to buy up these companies if they do seem viable in the future. And as you can see here, there was a financial statement that was leaked from BlockFi showing that they have been negative even in the best parts of the bull market over the past couple of years. Here we have the fiscal year of 2020, and as you can see, the gross profit was negative $5,126,932, which isn't very great, but understandable since we did have a pretty bad negative downturn at the beginning of that year. Also, they had operating expenses totaling $45,707,000, and that put them at an operating income of negative $63,930,000. They were hemorrhaging money pretty fast there in 2020, but like I said, we did have a pretty rough time at the beginning of that year, and then in 2021 we had one of the best years on record. Here you can see that they did turn a gross profit that year of $74 million, $74,167,000, but then they decided that they thought that the market was going to keep continuing to go up and they should probably grow their business so that they could make it larger and have bigger profits in the future. So they spent $273 million growing their business, and as you can see, that put them at a negative of $221 million, $221.5 million for the year. That probably would have been fine if the market continued going up in a straight line forever, because of course if you build your business then you might be able to have profits if the markets continue doing well. Here we have the fiscal year of 2022 expected, and as you can see they expect to make $257 million this year, which doesn't seem very likely with the market being down 80% and them having to ask for a bailout from FTX. But as you can see here, they also expect to spend $317 million, which means that they would be in a negative anyway. So I don't think that this is probably a really great business to be bailing out at this time. And it looks like they think that next year they're going to make $201 million, but I don't see how they think they're going to be doing that if we're going to be going into a recession, and during the best part of the bull market they were still negative $221 million. Hopefully Sam Bankman-Fried can turn BlockFi around whenever they do finally get it purchased, but I think that it does look like a failing company, and if they don't get it to be profitable, then it could possibly put FTX in danger in the future. Just like BlockFi and Voyager thought that the markets were going to be turning around and they could make a bunch of money off of their loan to Three Arrows Capital, and just like Three Arrows Capital thought that they could make a whole bunch of money because the market was going to keep going up and they could leverage their trades with Terra Luna, FTX seems to think that the market is going to be turning around pretty quickly and that they're going to make a big profit off of buying BlockFi and bailing out Voyager Digital. But if we go into a prolonged recession and we don't start to see the cryptocurrency take off again real soon, then it could be a good idea to pay attention to how many companies FTX has to bail out, because if the markets do continue to go down, then they might have to continue bailing out more companies so that they don't lose money on their investment of buying BlockFi and bailing out Voyager Digital. If they bail out a whole bunch of companies and then they can't afford to bail out anymore and the market keeps going down, then that could put FTX in danger of failing, and when they fail, then all of the companies that they have bought under their management could go under as well, sending huge panic and a contagion through the crypto markets and sending everything to virtually zero. I don't think that this is hopefully going to be happening, but this is why I try to say that we need to invest in really strong projects that we know are going to be here through the next bull market. Traditionally, that means Bitcoin, but I think Ethereum is probably going to be around as well. Unfortunately, though, it does seem like they're going to be switching over to proof of stake really at the wrong time, because whenever they do switch over to proof of stake, 9 million Ethereum are going to be unlocked, and that means that they could float onto the market whenever the market is already too low to absorb that. If that happens, then that could collapse Ethereum and pretty much every project linked onto their chain, and that is a lot of projects, really. That could cause a virtual bank run on cryptocurrencies, collapsing stablecoins and sending all kinds of companies to the hell. And then if that happened, then FTX could collapse, and it could just be a cascade of events, like I said, and it could send the whole markets down for a prolonged period of pain. Like I said, the crypto markets have never been through a serious recession like we're possibly going to be going through right now, and I think that this is going to be the biggest test that we've ever seen for cryptocurrency. A lot of more centralized projects do have these issues because there's people behind the scenes making bad decisions, and they should just be decentralized and let the market work its way out. I think that the more decentralized and larger projects are probably going to make it through, and they're probably going to be around during the next bull run, making people that have stayed invested in them the biggest opportunity to make life-changing wealth in the future. If Ethereum can delay dumping all of those 9 million Ether onto the market and they don't collapse, then I think that Bitcoin, Dogecoin, and Ethereum will probably be around in the next bull market, and that's really where I'm putting all of my money right now. Whenever things start to take off again, usually Bitcoin is going to be the one that leads the way, and at that point I'm going to start pouring money into altcoins because they're going to be going to the moon next. In the meantime, I think that the best thing I can do is educate myself, and I'm going to try to educate you guys along the way so that whenever the time does come, we all know what altcoins to throw our money into. Also, on the other hand of all of this, if FTX does pull it off and they stick around during the next bull market, then they could have kind of a monopoly over a lot of really good projects, and they could definitely be going to the moon. All of these investments could definitely pay off, but if the market doesn't turn around whenever Sam thinks it's going to, then they could be in danger of collapsing if they find themselves too over-leveraged during the next dump. The second quarter did just end, and we're going to find out real soon if we're officially in a recession, and when that happens, everybody's going to be looking to the Fed to try to step off of their tightening and hopefully start stimulating the market again. Like I said in one of my previous videos though, if the Fed doesn't get their rates raised high enough to stimulate the market again when we do see a recession, then they're not going to be able to stop it, and we could be going into a full-on depression. So I think that even if we do start to see inflation peak, the Fed could continue tightening until it gets to a point where they have to actually about face, and until they're done raising rates and they start being more accommodative again, I think we could see some more pain here in the markets. Alright, so here you can see we have the Bitcoin 4-hourly chart, and it's sitting at about $19,300 at the time of recording. Unfortunately, however, you can see we do seem to have an inverse cup and handle forming here. And how you'll usually forecast one of these patterns is you'll put a line across the top of the neckline for the cup, which is now the bottom since this is an inverse cup and handle. And then you'll take the depth of the cup from the bottom to the top of it. You want to take that line and then extend it from the breakout point underneath the neckline. That means that we're probably going to be seeing Bitcoin come down to about $15,600 roughly. And at this point, a lot of people are actually starting to say that we could be going down to about $15,000. I don't know if that's going to be the bottom though, because we could definitely continue to the downside after that if we do continue to see the Fed reacting pretty harshly to the inflation data that we've been seeing coming out recently. And until they do actually stop hiking those rates and start to be more dovish like I keep saying, and we start to see that inflation data come down, I think we could see some more downturn in the market. And if the rest of the market, including the stock market, is going down, then I don't think that crypto is going to be escaping the pain. Backing out to the daily chart, I'm not seeing any kind of bullish divergences here or any divergences at all. Also, this MACD is starting to converge back in on itself, and it looks like these green sticks right here are starting to get a little bit shorter. That means that it might be starting to top out of its momentum that it started to have trying to go up, which wasn't much as you can see, and it looks like it might be getting ready to head back to the downside some more. If we do see this MACD line crossover right here, which it is just about to do, then I think that's going to be the trigger we're looking for to break down and then fulfill this inverse cup and handle pattern. All of the altcoins are going to probably continue following Bitcoin, and until Bitcoin actually finds a solid bottom and then catches some momentum to the upside, I think the altcoins are going to be too nervous to make any real gains because usually Bitcoin leads the way. Nobody knows how low this is going to go, and nobody really knows how over-leveraged a lot of these projects are that could collapse next. If more projects do collapse and FTX starts to try to bail them out as well, then if we do continue seeing bearish momentum and we go into a full-on recession, then eventually FTX could run out of money and they could collapse as well. We haven't seen inflation start to slow down yet, and the Fed has not said that they're going to start easing again. So I don't really see very many signals at all, if any, that we're going to be seeing the pain end real soon. As a matter of fact, a lot of people think that we're just getting started because the S&P 500 dipped a lot more during the 2008 crash than it did during this crash. If that is the case, then initially I'm sure we'll see some more pain in the crypto markets, but supposedly Bitcoin was created for recessionary times, and hopefully if it does play out like it was made to, then we could see it eventually rebound and do well during the recession. I wouldn't get your hopes up though, because like I said, it hasn't been through a recession and nobody knows what's going to actually be happening. But if it doesn't go up during the recession and it doesn't turn out to be recession proof like it was intended to be, then I think it is going to eventually come back whenever the recession comes to an end. And no matter what happens, I'm definitely going to be taking as many opportunities as I can to buy in. Even if we aren't at the bottom, I think we're definitely closer to the bottom than we are to the top. And eventually I know that the markets are probably going to recover, or else we're going to be having way bigger issues than worrying about our investments. Let me know in the comments, do you guys think that Sam Bankman-Fried can actually act as the de facto crypto Fed? Or do you think that eventually they are going to run out of money because they don't have a money printer? Either way, thank you guys so much for watching. I hope you have a wonderful day. Don't forget to hit that like button, and I'll see you next time. Bye.